Well, dude, that was so cool hanging out with those guys in
No, it was.
That was awesome.
I've never felt more. I've never felt like we have more presence until just that moment.
Dude, Will and Preston.
It was Will and Preston.
They just showed up, and I was like, all right, why not?
Just happened to go hang out in the general voice chat.
Why not have a drink with these fellas, man?
At the perfect time, so it was like, let's jump in.
Yeah, it's cool getting to know it. I mean, Will is an economics major, dude. Man, he probably knows more about actual economics than we do.
Well, here's my favorite part: is that they're both from
Long Island.
Long Island.
Yeah.
I'm from North Island. I'm from South Island. Oh shit! There's about to be a fight.
Yeah, it's like you guys are two train stops away from each other, man. Come on. Did you know that over $5 trillion exchanges hands on a daily basis? That's an average of over $220 billion an hour. Now, how does this much money move every single day, and why does it move the way it does? Here on Drunkenomics, two bartenders who also happen to be students at the University of Nebraska Graduate School of Business are going to sit down and drink to the global economy and try and translate it into English. So sit back, relax, pour yourself a stiff one, and have a drink with us to the comedy that is the global economy. Okay, everybody, and welcome back to yet another presentation of Drunkenomics. This is the drinking podcast with an economics problem, an exponential economics problem, I should say.
Fuck you, Russia, by the by.
Yeah, because this is actually take two of the welcome back because I messed up take one. So take two.
I mean, in Russia,
you're witnessing
messed up take 0.5. I don't know.
I mean, is that? I feel like that's kind of how you know what kerosene tastes like is if you messed up take one and then yeah. But anyways, so glad you all can join us. I just want to say real quick to the members of our Discord, Will and Preston. Great hanging out with you, man.
Yeah, it was awesome.
Seriously, you guys are awesome. Hopefully, one of these days, you guys can meet up at a bar, meet up at some Irish pubs, maybe do St. Patty's Day together, do some car bombs, and talk about how stupid the economy is, or whatever it is. I don't know.
Because it doesn't get better. Yeah, for the rest of the story. I guess for the rest of you, I guess the moral of the story, if you see us online, feel free to jump into the voice chat. You never know, we might jump in, as we did tonight.
As we did tonight, yeah.
It was a fun time.
Yeah, we hung out with two econoholics, and it was great.
They could have been drinkonomists. We didn't ask.
We didn't ask, but honestly, don't even know what the difference is. One of these days, we'll figure it out. And also, one of these days, too. Okay, sorry, I'll finally say this. One of these days, we'll finalize the movie list, and we'll post it on Instagram, and it'll be on our story forever, okay?
I don't know, we're 5 out of 10.
Yeah, but then again, like that 10 can easily become 20, and then...
We should be 10 out of 10.
Yeah, so... Should have happened. We'll get around to it. I swear we'll do it. Anyways, speaking of our Instagram, you can find us on there and Facebook, in other words, Meta. And then you can also find us on Twitter at Drunkenomical. DRUNK,
And it gets worse. No, I mean...
No,
it doesn't. It gets better.
Because we have Discord. You're right.
We do Discord. No, and that's the invitation. I'm sorry. Wow. That was on me. I dropped it. But yeah, no, find us there. Find us on it. You can find us. You can find the invite to the Discord, and that's how you get to jump into the voice chat.
Yeah, we literally when we did the 2 shots before the mic was hot. I mean, we were doing that with Will and Preston, man. Our two blokes,
and you hear the great stories about why James is not capable of being able to smell Bacardi Raz anymore, or why James is a huge fan of Narragansett. I don't know.
Oh, okay, that part is cool, but the first part, we don't really need to revisit that Bacardi Raz, do we?
Or you could be in that same voice chat. You can see the video, and you can see James sitting in Aaron Wong's beanbag.
Oh my gosh, yes, the one that I made famous. So
the big green, as we call it.
Yeah, and speaking of which, yes, Aaron Wong. I am the less gracious host this week. Gosh, every week it seems like every week. I'm so upset with Russia invading Ukraine because I've become so much less gracious because of that.
Oh, it
also
wasn't.
Because
that's not the only reason.
I mean, I'm upset with him invading because of other reasons too. But one of the reasons I'm upset with him invading is because I've been constantly less gracious, which makes you the more gracious host. So, what was your name again?
Aaron Wong, less gracious. James Goldwater, more gracious?
James Goldwater.
Weird. Not sure that's going to keep, but
James Goldwater Bond. Right. Well, I mean, after a day like today, you probably won't.
James Bond.
James Goldwater Bond.
Graham.
But after a day like today, if we have more days like today, maybe I will reclaim my throne to the gracious host.
I don't know. Today was pretty volatile. It was really... It ran the gamut.
It was one of those things. I mean, today was one of those things where it's like, I mean, markets bounced back, but we still were uncertain.
But then we saw oil commodities drop 12%.
I know. So, like, I don't know. I don't know if the markets are responding to oil Because when oil prices go up, that means your bottom line for a lot of companies is further away because that means more expensive supply chains, usually. Yeah. But when oil prices fall, was that the catalyst for the reason why the markets were up? I don't know. I don't forget what they closed up at.
I actually think it was the fact that the UAE had a diplomat in DC today going, they're inclined to pump more oil. I think that's actually what it was.
That's what it was.
It was an indicator. It was an. The
markets were up 2 to 3% today.
Well,
so
no,
I'm just saying.
I'm thinking that the UAE's diplomat is the reason that oil prices were down.
What are the markets? Okay, hold on. So what are the UAE's? So what did Dubai say?
Apparently, their diplomat told the UAE same thing. Well, so UAE apparently told. So UAE apparently, their diplomat apparently told the White House that they are inclined to pump more oil in the future.
So
I think the markets took as a message from OPEC. They're going to, and it's calmed the supply fears in markets. Now,
but I feel like the UAE isn't OPEC because isn't Saudi Arabia technically OPEC?
Well, they're both in OPEC.
I know that.
Saudi Aramco is now a publicly traded company, so it can no longer give public messages. It can no longer give messages on behalf of the Saudi government. Saudi Aramco now must behave it with fiduciary responsibility to its shareholders,
yes,
of whom the vast majority are the Saudi royal family.
Yes.
Right? So it's no longer allowed to pump at a price at the below market price without a distinct and defined reason and time period.
So I mean, today was just a weird day. I was literally like, I don't get it. You know, in the after hours, I will say this, just in case anyone's wondering about certain particular stock news. Amazon is doing they announced a 20.
Yeah, 20 stock is finally
split.
We talked about it the other day, and it's finally, 20, one stock becomes 20, and then they're also doing a $10 billion buyback.
So very bullish for the stock. Normally, anytime there's news like that, it's always bullish for a stock.
Yeah, if you owned a share, you now own 20, and on top of that, well, it went from maybe $2,000 to now $200. But
my boss at work was like, "Hey, now I have 5 shares, so now I can start selling some covered calls against Amazon."
I mean, that's a way to do things.
I thought that was like, I was like, "Hey, you get it's like a dividend, you know, it really is. It's like a dividend, right? So it's not bad, right?" But yeah, so that's one stock news. But like overall today, and we're recording a little later this week, March 9th, 2022. Today's it's 2022 still. I'm still not used to it.
I know it's weird, and we're a third of the way in.
I know, God, why did you say that? Why I don't feel good after I heard that.
It gets worse. Until we do my birthday episode.
Moral of the story: it gets worse.
I've warned you.
You have. You have officially warned us, so I can't sue you. So weird. Like today was such a weird day. I just don't get days like today. So Dow was up 2%. S&P was up 2.5%. Nasdaq was up 3.5%. And the Russell was up 2 3/4. So, and I'm talking percentages here. So, what do you think? Do you think this is a dead cat bounce, or is it a response to the war being priced in, or the FOMC meeting next week, which is scheduled for March 15th? I think is it the market pricing all those in, and then everyone going like, all right, we've steadied out. Let's go back into the market because that's where you hedge against inflation.
I think markets are up, and I think foolishly so.
Wow.
Because I still don't understand why markets are this high. You have to give me an explanation for why they are this good.
Well, okay, so they've calmed down. I mean, since
but hang on. At the same time, I would sit here and I would look at the stocks I look at person. I'd be like, well, you know what? This stock should be trading higher. It's like Raytheon. Raytheon makes the Javelin missile. The Javelin missile destroys Russian tanks.
Yeah.
Even their best Armada tank.
Right.
But here's my problem. Raytheon is trading down today. It traded down today.
I saw that.
And that's very surprising to me because it's like, do you not think that Raytheon's about to get huge numbers of orders from every nation bordering Russia?
What you have to understand is
we really would like some Javelins.
But what you also have to think about is the stock market is forward-looking. So maybe a bunch of investors back in November was looking at this Russia-Ukraine thing developing and going like, all right.
I don't think so because Finland and Sweden aren't part of NATO, don't have Javelins.
Right.
They're now looking to join NATO.
You know,
and I promise you Poland wants Javelins because they just sold a bunch of anti-tank missiles to Ukraine for free. By that I mean it gave it to them.
Right.
But
well, I mean,
they need Javelins.
I'm just saying, I mean.
Even Taiwan's in it for some Javelins, let's be fair.
I get it, but I'm just saying, you know, in December, November, that time frame, I mean, Raytheon's up about 10% since then. So maybe maybe it was already priced in, right? Obviously, this is not financial advice, so we're not saying everyone can go buy Raytheon stock right now.
What I'm saying
right?
is Ukrainians are shooting a lot of Javelin missiles at Russian vehicles that are no longer driving, so the missiles are working. So what I'm saying is Ukraine is shooting, either Ukraine or someone else is buying, and Raytheon is down. No, revenue is going to go up.
Well, but maybe
that's how I look at this.
Maybe this operational quarter was already priced into the stock. So that's why.
I don't think
so. But that's.
I don't think you can.
That's not up to you.
I don't think you can price in. Okay. I don't think you can price in a multi-army assault on a nation state.
I get that. All I'm saying is this is not financial advice. Doesn't mean Raytheon stock is going to go up.
But I can say their top line probably will.
In actuality, yeah, I agree. Like their revenues this quarter, maybe next quarter, and the quarter after that are going to go up.
They're going to sell a shit ton of missiles.
Well, it doesn't mean the stock price was going to go up.
Well, that's true.
That's all I'm going to say.
And if it turns out that Raytheon is less efficient in manufacturing these missiles than historically we thought they were, their stock price should not go up.
Or maybe what people are pricing in is, okay, commodities are so much more expensive now, so their bottom line is so much. Their bottom line is so much further away.
Harder to get to.
There you go.
Okay.
So it could be that, right? So we don't know. We don't know why the stock is only where it's at right now because there's so many different angles to consider.
Oh yeah.
But what I'm also saying too is, as much as that doesn't make sense, now because of this correction, the forward PE of the S&P 500 is 19-ish, which I know still sucks. I know you still hate it.
It's an option. I wouldn't call it a bullish option.
To me,
but it's an option.
To me, 19 is not appealing at all. But for the last 2 years, it's been hovering between 22 to 26.
And for the last 2 years, I can tell you why that's wrong.
Right.
But then again, I'm drinking, so.
Yeah. And speaking of drinking, you have a lot of liquidity.
Oh, yeah.
And whenever there's liquidity,
it's a hell of a lot easier to have a pool fight in a pool. It's a hell of a lot easier.
What I'm trying to say is, Morgan Stanley said the median forward PE for equities is 19-ish.
Oh, yeah.
I saw that $19 PE last week, right? So obviously, the stock market has cooled down.
Yeah.
But today, I don't know, everything was up. Like I said, everything was up a little bit. So you're saying that's a dead cat bounce? No.
I don't understand how you have all-time highs coming out of actually, not even coming out of, during a pandemic. It doesn't make sense. Concrete's never produced more than that time that everyone that produces the concrete was sick at home.
But I understand. But at the same time, let's look at it from another angle. Do you understand why there's an all-time high when the Fed balance sheet is $9 trillion, which is about 220% larger than it normally is?
I absolutely understand when there's free money to borrow and you can buy something that yesterday you wouldn't have paid $2 for, but today you have $2 for free. So it's like, well, I can buy a gumball for free. Who gives a shit? Absolutely. So I understand why it happened. I'm just saying it's not real. It's like a marshmallow.
Right. And in more economic news, it looks like more and more things have been pulled out of Russia. So like McDonald's, for instance, stopped doing business in Russia.
Coke, Pepsi,
Starbucks. Yep. What else? I mean, name a company that does business
that wants
everywhere
to stay
around
there.
the world. Yeah. I think Adidas backed out too.
Adidas is out.
I mean, a bunch of companies are out. So
So at this point, Russia has one access point to the world. It's China, and I'll be honest. Even China's not going to launder their money to get them foreign currency. There's a reason that the Russians back when Russians were going to the bank trying to withdraw money in U.S. dollars because the dollar is going to hold its value. They went, you could pull out 10,000 U.S. dollars, and then everything else after that has to be rubles. And I was like, well, I've never pissed my money away, but at least I have $10,000.
Right, and it seems like everybody is saying like, okay. If you need a seizure of assets, this is something we talked about last week too, where like if you sold equity to a Russian state bank and you want your equity back,
good luck.
It's good luck, but like it's also everybody is saying like your country, if you sold like if you're Germany or if you're a German company and you sold equity to a Russian state bank, you are entitled like you bought like global. I forget what the law is called because I'm drinking too much.
Well, so the real thing is, if 20% of my firm is owned by Russia, my view is they can't liquidate. I can't compel them to give it back to me, but at the same time, they can't liquidate. So it's like someone just shoved a sock in the mouth of my 20% partner, and I don't have to care about.
But you're also
being said. revenue aspects are problematic.
Yeah, but I'm just saying, like, there's 20% of your equity. Like, it's like if you sold someone like the backyard to your house and then it just disappeared. It's kind of like that. But at the same time,
right.
what you're allowed to do now, a lot of countries are saying, okay, if there's Russian assets that you can seize them. So
I've never owned a yacht, but I'm hoping.
Yeah, so the Ukraine part, like one of the big things was the Ukraine parliament approved a law to allow seizure of assets owned by Russia or Russian citizens in Ukraine. So, and I think a lot of other countries are following suit, and they're just going like, all right, look, we get that you might have lost equity in this company.
So what I heard so far is there was is the Ukrainian engineer on a Russian oligarch's yacht who opened the bottom hatches to try and sink the boat while in Spain, and the courts there just went, well, you're arrested for trying to sink the boat, and he went, well, yeah, but it's owned by a Russian and I'm from Ukraine. And they went, well, we'll put you on a plane to Ukraine, and he went, all right. So and now I have to assume, based on his engineering skill, he's probably building roadside bombs. You know what? How the mighty have fallen, because now there's a huge number of American veterans going to join the Ukrainian Foreign Legion. Mm-hmm. There's also a concerning number of Al-Qaeda going to join the Ukrainian Foreign Legion. So maybe we'll usher in world peace when U.S. veterans and Al-Qaeda veterans get together
and fight against Russia with Ukraine.
And just agree to kill a different group of white people. And maybe that's how we get peace. And I don't know.
Well, I don't know. Stupid. I think there's still a lot more to unpack here because we don't know what's going to happen with China and Taiwan.
Well, I think
China seems to have cooled their. The weird thing about the Russia invasion on Ukraine is China has kind of crawled back into their turtle shell.
Well, yeah, and so here's what I'll say. And so no, for me, it's for two reasons. It's two reasons, very simply. China's big thing for the last 60 years has been sovereignty. You are a sovereign. You're a sovereign nation. Yeah. These are your borders. We all respect them. And for the last 60 years, the rest of the world has tacitly agreed. Okay, China, these are your borders. Formosa is just a rebellious province that we all do business with independently of you. And so what China's looking at Russia in two ways right now. One, it's going, you've recognized your neighbor as having independent republics, right? Which is the antithesis of what they want, because they can't have Hong Kong and Taiwan recognized as independent by anyone else, because it's the antithesis of sovereignty. So they've gone sovereignty because those are ours. They're gonna fuck it up. Just give us time. Yeah. They can't have anyone recognize them as not fuck upable. And then that's a good
way to putting it.
Second message is the Russian military is incompetent.
So you're saying China doesn't think their military is incompetent. So
no, I think China's quite confident in its own military aspect. I think China's looking at what's happening in Ukraine, and it's looking for two perspectives. And the first one is, if the people of Taiwan dig in like ticks, and if the people of Taiwan blow up the factories, burn everything, destroy everything that we're trying to seize from them, what's the point in going there? What's the point? Why do I want to go to an island that I have to rebuild and I can't rebuild better than it was, because they're going to hate it and they're going to burn me down from the inside out? And so it's that poison pill.
Yeah,
it's that crown gem strategy.
It's the hostile takeover
against hostile takeover. But here's the second message: Russia in Siberia has a huge amount of untapped resources, unexploited resources, and I have to imagine, because all I'm looking at right now, and all China, who is right there on several borders, is looking at it going, Russia can't defend its land. They can't take over their neighbor that isn't an equal to them militarily.
No.
Ukraine Russia-Ukraine is the closest thing to a near-peer conflict we've seen in my lifetime. I think I may have said this before.
Yeah.
But Ukraine is not a near-peer. I did. Yeah. And I said this then. Ukraine is not a near-peer. If I'm China, I'm sitting here going, Russia can't defend its own borders. Russia can't defend its own land. Why am I? They're my allies, sure.
Yeah.
I might as well Belt and Road Russia.
Wow. What? Really?
I would Belt and Road Russia. I'm going to buy their.
Are you talking about their their emerging markets investment initiative? The Belt and Road initiative.
Yes.
Wow.
I would.
Okay.
Because I'm going to buy Russian natural gas to fuel my factories at the preferential price I negotiated.
It wouldn't be actually China. It'd be their state banks, which is technically China still, but
Same
yes,
market.
go on.
I'm gonna buy my natural gas from Russia at the preferential rate that I negotiated before he invaded Ukraine. In fact, you know what? I'm gonna up it 25%. I'm gonna pay him 15% more because he cannot do business with anyone else in the world. So you know what?
Yeah.
You do business with me, or you don't do business. Also, you owe me money because of my Belt and Road.
Because
I'm gonna take Siberia from you, and the best part is, I'm gonna do it before you even know you're dead.
I don't even know. Like, so my thing is like, what? Like, if you want to like another synonym for the Belt and Road Initiative, you might as well call it the Loan Shark Initiative.
Yeah, you call it
That's what it is.
It's a tapeworm.
It's a loan shark operation. That's what the Belt Road. That's exactly what it is. Basically, they go in there, they leverage you to the tits. They make you leverage yourself to the tits because they're saying, "Look how much economic output we're going to help you produce." And then
the next
all
thing
of a sudden,
you know,
all of a sudden, it's like, okay, well, the turnover wasn't as fast as I thought it was going to be, and China was like, "Well, that's your problem."
Well, that's your problem. I still own 80% of the factory, 60% of the factory.
Yeah, then it's like good thoughts. It's like, well, where's my money?
Fuck you, pay
because we loaned exactly. So it's like they force you to sell assets that you previously had to finance the assets that they made you finance because they said, "Hey, this was a good idea." If
they force you to give them lucrative mineral rights,
exactly,
something you own but weren't exploiting. So they can exploit them.
Yeah.
And then they said, we're going to give you 50%. And then they went, well, actually, it's going to be 40% and also fuck you.
And then they said, oh, with all this interest and with all this, it's like, because we did this and we did this, we want to get our money back. That means for you, you don't get cash flows until way after they get their cash flows. And then they say, okay, well, also, because we loaned you this in the first place, you owe us that money back.
Now it's interest, so we're just not going to do that. So
it's a loan sharking business. I mean, what China is doing with their Belt and Road Initiative is a loan sharking business. I mean, they're literally they're bleeding people dry.
It's soft colonialism without the decency of being soft.
So, like I said, like a large scale loan sharking business, man. Like it's crazy what they're doing.
It's a Xi Jinping.
It really is. So you're saying they're going to extend an olive branch on that loan sharking business into Russia?
What I'm saying is I don't see why they wouldn't.
Yeah, I mean, because China's actually a global economic player. Russia is not. You
don't turn down legitimate exploitation rights, and so while Russia might be a legitimate economic player, they're not.
Right. No.
And on top of that, it turns out that if you can't conquer. Okay.
So let me ask you this then: Why do you think commodity prices are shooting up? Is it because of this invasion?
Well, yeah, obviously, yeah. And so there's two parts to me. And so the first one is the United States did pass again resolution today that we're no going to import no Russian oil or no Russian energy is going to be imported in the United States. And so that's actually that's gonna skew U.S. energy prices.
Right.
To be fair, that might actually push global outside the U.S. oil prices down.
Yeah.
Because at least the U.S., the big block buyer, is not buying anymore or isn't buying from them. So it's like they have to now commit to a lower price.
Yes. Sorry, I'm making another old fashioned. So
no, you're absolutely fine. That's why I'm doing what I'm doing.
The
next one is is that what's driving U.S. oil prices up? Actually,
no. Me making this old fashioned is not driving up oil prices. Oh,
what?
Sorry. No, you were answering the other question. My bad. I thought you were talking to me about this old fashioned.
No, I think actually. So actually, what I find very funny is the whole so there's Republicans and there's Democrats in the on the Hill, and they're like, oh, we should not import energy from Russia. My response to that is correct. Okay, you're not wrong, and they're like, but that's not what's driving energy prices up. My response to that is, well, it is.
I know,
because in the short term,
I'm not talking about energy in particular, even though I kind of am, because I'm just talking about general commodity prices in general.
So what really bothers me on commodity front, it's actually not oil. What bothers me on a Russian commodity front is actually nickel.
Yeah. Okay. So
Russia,
why did nickel go from 55,000 to 100,000 like that?
So here's why. So Russia exports 17% of the world's of the global high quality nickel. And so there's actually this very interesting question of I
thought the thing was palladium.
70% of the high quality nickel, they have palladium. So remember how maybe 4 weeks ago, we were discussing, why does everyone care about Guinea? Well, it's because they have a huge reserve of bauxite and
bauxite
also
and aluminum,
a huge reserve of high quality iron, high quality steel, future
Oh,
product.
right, yeah.
And so it's like, okay, I've got a huge amount of low grade steel. Who cares? I'm sorry.
Well,
Steel's an industrial product. I have low grade iron. Who cares? I have low grade nickel. Yeah, okay, in a pinch I can make that work. I have nearly pure nickel in my ground. Well, now we're talking.
yeah,
See,
but it's also
right?
like
So, like-
palladium. But it's also like palladium too. Like the purer it is, the better it transfers.
Well, the pure of any product, yeah, the better you're going to do industrially. So
Right.
then, so that's
But
and so
I'm
that's why
saying,
we
like,
make
as far
that's-
as where the world is heading.
yeah. And so that's why we make economically. That's why we make differentiation between like, oh, there's Russian nickel, and then there's Chinese nickel, and then there's
Yeah, of course.
Hong Kong nickel,
Because
and then there's
each country has
Mozambique
their
nickel, and it's like okay, well, what's
Yeah.
the quality of the
each
product coming in
country.
each place?
Yes.
And when it's like,
Yeah.
oh, the high quality one is in short supply and the low quality stuff is still there, it's like,
Right.
I can buy it for the same price I was always able to buy it for. Maybe.
Okay.
But
Yeah.
then it takes me more money to purify it into a nickel I need for my product.
So are you saying nickel? In other words, long way of me just asking this question. Like, you're saying nickel futures shot up, but it wasn't even nickel futures. It was nickel spot price. So you think nickel shot up because what you said 18% or something like?
So 17%. So the nickel
17%,
spot price
yeah.
shot up because all the current consumers of nickel suddenly found themselves in two positions. They can't guarantee a supply from Russia. They can't buy from Russia, and then they have to source from somewhere else, right? So you almost always see spot prices shoot up when supply finds itself in a shortage for whatever reason.
Yeah, but to me, it's kind of like, like remember when GameStop first shot up?
Mhm.
So it's kind of like that, right? So like if you know what a gamma squeeze is, a gamma squeeze is essentially there's too much open interest. The market makers are not delta neutral, so they need to become delta neutral, and they need to buy a bunch of shares of of GameStop or whatever the underlying
the
stock
underlying
is.
security. Yeah,
So-
they have to close out the position.
Yeah, so they have to keep buying these shares or buy other things. Like they now have the need to become delta neutral as well. So essentially, volume comes rushing in. So is that essentially what you're saying? Like that's why like there was like a gamma squeeze in terms of nickel
it's not.
futures that drove the spot price up?
No, so
Or-
the spot price is that there's
It's commodities,
Yep. And so when spot price goes up, that means it's actually a shortage currently. Like you and I are fighting over a stick of gum. If there's only one stick of gum,
Yeah.
we can't both be happy unless we agree to have half a stick each. And that's not how business works. And so
No, yeah.
we're both competing over the same stick of gum.
Mhm.
We're in a shortage now. That's where we start to see these prices, the spot price rise. Now, the future for next month might say, we're going to have 3 sticks of gum. Now, you and I might
So-
go, well, let's see then.
Yeah.
Now, as we get closer
But-
to the day the spot price comes,
Mhm.
the day that future expires, where this guy who said,
Yeah, about 3 sticks,
I
yeah.
believe there's going to be,
Yeah.
3 sticks of gum on the 15th of April.
Yeah.
And you and I, it's the 13th of April. We're sitting here, each of us desperately wanting a stick of gum, and not for
yeah.
some reason having bought into the stick of gum market. We're sitting here
Having
and
reserved
suddenly,
the right to buy one of those sticks of gum.
yeah, and that's a different issue. Suddenly he shows up and he settles and he's like, I've got 3 sticks of gum. And he starts to arbitrage. Who wants a stick of gum? We're both like, oh, yes, please.
Yes,
and then,
yeah.
we're paying the same price then that we would have paid now for the stick of gum. But at the same time, we didn't do it because we didn't trust the stick of gum was going to be there.
Yeah.
So,
And that's the crazy thing about futures markets. Like I mean, arbitrage is so common. It's such a common practice in the futures market where it's like,
oh, yeah.
when it comes to nickel, like the fact that it went from 55,000 to 100,000
Oh,
like
yeah.
that. And the LME, so it's a London Mercantile Exchange.
Metal exchange, actually, wasn't it?
Is it metal exchange? I thought it was mercantile. It could be metal. Whatever it is. Mercantile, metal, same thing.
Not quite.
I know it's not, but for sake of
It's the London
conversation.
Metal. It's the London Metal.
Okay, so it is the London Metal Exchange. Sorry.
Reading about them last night, so it was a thing. I was
Whatever,
up
man.
to.
Yeah, whatever, dude. This is my fifth old fashioned tonight, dude. I don't know, man. Whatever it is. So
Hey.
the London Metal Exchange said, "All right, we're gonna impose a backwardation limit on nickel," which is crazy because a backwardation limit is not a very common thing.
No. So backwardation, I guess, just to define some things.
Let's define backwardation.
So backwardation is when the current spot price of an asset
yes,
is higher than the future of that asset.
Yes.
And
Exactly.
that almost always occurs in a shortage.
Mhm.
Now, it's always this is the specific language to do with futures contracts.
Only
And so,
futures.
obviously.
Nothing
And so obviously
nothing else.
if there's backwardation, obviously the spot price right now is higher than the futures price. Then there has to be another side of that where the futures price is higher than the spot price, and that's called Contango.
Yeah,
Contango.
But people don't know about Contango. A lot of people so it's when it comes to the futures markets, it's Contango versus backwardation. Contango is a normal thing, right? Like think about it like the yield curve.
Well, Contango is the easiest thing to do.
Yeah, but
what Contango boils down to, I think it's gonna be easier this way.
Okay, yeah, go on.
Contango is I can buy a barrel of oil today for $114, and you're gonna pay me next month $140 for it. All right, I'll buy it. I'll secure it. I'll give you. That's Contango.
Price.
The future price is higher than now. It is. I can buy it right now and sell it to you next month for more money.
Yeah,
perfect. I'll do that.
Yeah,
who wouldn't do that?
Yeah, but the thing about Contango is that's a normal thing because
it is. It's a normal thing, and there's an upward limit.
There's an upward,
so essentially,
but there's
it costs me storage costs and insurance to. Yeah, it costs me carrying costs to hold on to the product.
Yeah, but like if you think about it this way, like when you're buying a futures contract, you're also considering, like in the price of the futures contract, you're considering like carrying costs, storage costs.
You're considering taking possession of the actual.
Yeah, commodity. Exactly. And then not to mention, anytime you're dealing with a futures contract, there's a premium. 100%. It's like an options contract. It's a premium. So the futures contract should be more. It should be more than the actual spot price of the underlying commodity. So Contango is technically a normal thing, right? Like whenever the yield,
it's a normal situation.
Yeah, so think about like when you think of like the yield curve. The yield curve, when it's got an upward sloping trajectory, it's a normal yield curve. It's kind of the same. It's similar.
Yeah, no. Contango is essentially I can buy right now and sell to you the same thing later and make money. Whereas backwardation says it's worth more money now than it is next month, or it is at the end of this contract.
Right. But the tricky thing about futures contracts is like it's not like something that actually just always goes up, right? It's not like a stock price.
No. Well, like it's also so the tricky thing about futures. It's always to do with commodities, and commodities. Fun fact, folks, can't go back in time.
Yeah,
as well,
and they have other factors like droughts. And, I don't know whether. Gosh, it's
droughts,
futures,
weather, a cold snap,
whatever it is.
They can all change.
Yeah, that can all influence the price of your actual underlying commodity. And then from there, like, do you want to know something about commodities that's not actually affiliated, like a characteristic trait of a commodity that's not affiliated with stocks? It's inelastic. You have to buy it.
Yeah.
You have to buy wheat. You have to buy oil. You have to buy oil.
It's not a security. It's an actual thing. It's not.
So
we're not talking about like, it's a barrel of oil. No, we are talking about it's a barrel. It's not like, it's
not a share of Apple.
It's 1/100 millionth of Apple. No, it's talking about it's a barrel of oil. Worst comes to worst, it's gonna show up at your house. You have a barrel of oil on your front step. You're like, I can't explain this.
Yeah, more like 100,000 barrels. But yeah, I mean, or no, not 100. 1,000. 1,000. Yeah.
And look, if as I measured out my space in my backyard when oil was at -44 a barrel, I was
talking about Contango.
I did some math. I thought I could have made some money.
Yeah, but the thing is, like, it oscillates. Like, it's not supposed to shoot up.
Yeah.
Like commodity prices are not supposed to shoot up.
Absolutely not.
Like, stock prices can shoot up and stay at that level, and that's great for people that are long the stock. And normally people are long the stock, but
not good for anyone else.
Yeah, but like futures contracts, it's like, honestly, if I told you tomorrow that oil was going to be $200 a barrel, would the vast majority of people be happy with that? No.
I'd be very concerned. I'd say why? And if you said, well, everyone's going to stop pumping, I'd be like, well, you know what? Fuck them. The Marines can make them pump.
Exactly. But that's what I'm saying is like commodity prices are supposed to oscillate because nobody wants to pay. I don't know what wheat prices are, but like nobody wants to pay a lot for bread. Nobody wants to pay $100. Nobody wants to pay $100 for a barrel of oil. I mean, like nobody wants to do that. You know what I mean?
Correct.
But if they have to, they will. So that's what I'm saying is like
a pinch, but sustainably, no.
But that's what I'm saying is like the reason why backwardation and contango is actually a giant factor in futures is because of this oscillating factor. You know, the price of these commodities is supposed to grow with inflation steadily. and it's not supposed to shoot up 10% in a
And they're
month,
supposed to
like a
meet
stock price.
the spot
you know?
price, and they're supposed to meet spot price.
Exactly.
on
They're supposed to be in contango normally, but not by much. Like, by the same rate of inflation.
Sure.
Right?
Yeah. I'll give you that. Yeah.
So technically, there's contango there, and then there's the premium. So whatever. But the thing is, like, oil right now is in backwardation, and apparently, with nickel shooting up 90% the way it did, like, they put a backwardation limit on it, which that was a term that I've never heard in my entire life until
so
one day.
I looked into it. I was reading, and so what I read is so what that means, as I read it, is essentially the LME, and they're only willing to give certain spreads on futures, and so they're not allowing people to expand futures contracts out beyond the most recent sale by more than 0.05% at the most.
Yeah.
Now, the reason they've done that is because if they don't stop the market from being exceeded on an up limit, down limit, which futures have an up limit, down limit.
Yeah.
Go both
which
ways.
is cool. Yeah.
Agreed. Unlike the stock market, then markets can be extremely volatile and can break things. So if it hits the up limit, it stops. If it hits the down limit, it stops. Yeah, so the backwardation limit on top of that means that the exchange in question will not allow a spread beyond a specific number of percentage points.
So like,
they're essentially just going like, no.
Yeah. So I mean, basically, like, think about it this way: like, if you're trading options and all of a sudden the stock goes from, like, if there's a $100 stock and it goes from 100 to 120 overnight, but the implied volatility goes from 100 to 400% overnight, obviously that sounds like a very good opportunity to short some options. So in that case,
especially in backwardation, well,
yeah,
I can sell to you product right now, having bought the future. So essentially, it's I'll sell you nickel right now that I'm buying next month, which is what a future really is, right? I'm selling you something now that I'm buying later.
Yeah.
The problem with futures, especially with commodities, is that the nickel I take possession of next month doesn't exist yet.
Yeah, it's not there. But the thing is, like, you're selling the contract today.
I'm selling you nickel at current market price that I don't have yet to sell you.
And then you'll cover the next month,
the market.
Which obviously, like, who wouldn't take that deal? Because you're basically what you're doing is you're shorting nickel at 90% higher than what it normally trades at,
knowing you can buy it cheaper in 20 minutes.
Because we know, like, the LME is saying, like, okay, this was a fluke event. People are overreacting to the fact that Russia supplies about 10% of the world's nickel and whatever. So people are overreacting right now. The price of nickel is going to go down.
Or return to normal.
Or at least come back to some sense of normalcy. So this backwardation limit is essentially saying, okay, you can't short nickel futures now and then go long nickel futures in June.
20 minutes,
because the implied volatility now is probably so much higher than the implied volatility a month from now.
Yeah,
maybe it is. Maybe it isn't. Right?
You cannot create market positions that create a profit currently, but are incorrect to the market as a whole. It's essentially you can't do this because the market isn't reflecting this. Stop.
Yeah, so the LME imposed the backwardation limit, which essentially is saying, all right, you can't short nickel. Which to me, I'm like,
fair.
Do I want the free market to do its thing? Yes, but is
the free market the most stable and beneficial method? No,
right? Like,
it needs a little bit of coaching.
Yeah, to me, what I'm worried about is, like, some retail investor getting caught with their pants down, saying, all right, nickel is up 90%. There's still some more momentum here. I'm going to buy nickel futures now, and if I'm worried about it later, I'll short nickel futures and I'll create a spread here and limit my losses. I'm like, no, like, hold on 1 second. When this kind of thing happens, in the price of the premium that you pay, you're paying for so much more volatility and you're paying for so much more price action, all that kind of stuff. That the LME was just like, no, you can't do that.
And so that's the beautiful thing about the exchanges, when they decide that they're going to say, no, we're going to stop certain transactions. We're going to stop transactions outside of a certain range, which is to say, like, in some cases they were saying, like, oh, you can't have more than 0.05% change from the last filled order in your next future. And it's them going, hey, look, there's obviously an issue. You can't create a position that if multiple people decide to pile onto that position, will break the fucking market. So essentially, it's essentially these exchanges going, all right, so we're in a position now where things aren't working well. We're now setting new rules to get us through the next period. And in futures market, that actually makes a lot more sense than any other market. Because sometimes it takes 2-3 days for futures markets to settle into a reasonable perspective.
Yeah, to some sort of reactionary state to the current market of that commodity. But the thing is, like now, nickel, the spot price for nickel shot up 90%. But the actual futures price of nickel didn't go up. The futures price for nickel was still pretty stable because everybody was like, all right, it's going to come back down. Like the general market was like, it's going to come back down.
Backwardation. There's apparently the spot price is through the roof. Currently, we have a current price for next month's nickel. It's going to be fine. The Shanghai index shut down nickel trading till Friday. London Metal Exchange shut down nickel trading till Friday. Well, they said we shut down nickel trading and it won't open, we think, before Friday, which means it might open on Friday, it might not.
There's enough liquidity in that market. We don't.
It's two exchanges that looked at the amount of backwardation and just went stop. And it's because I think, to me, it's the big one. They're trying to stop the shorting, and it's that you can actually, in theory, you can sell, so you can short a future. It's so stupid because as I read about it, it doesn't seem like it should be legal, but you can short it by selling at the current price and then paying a small premium and replacing whatever. So the nickel, I sold all your nickel at the current spot price.
Yeah,
I'm going to pay you a small carrying premium until I can give you the nickel in 30 days. My future contract that was trading $300 cheaper per contract comes to fruition, right? So I can pocket $300 per thing minus, I don't know, $27 in a bottle of Rumplemans. Well, I don't know. It's bad
to me, like, this is such a good opportune moment for people to short the spot price of nickel.
That's why the backwardation limit exists, because it's saying,
hey, stop it. Yeah,
it's to prevent bankers from piling on to profit at the expense of the market as a consistent factor.
Because if they didn't have this limit, next thing you know, then the price of nickel is going to go from 100,000 to 200,000 because everybody's rushing to buy to cover it because we have another gamma squeeze, because we have another GameStop situation. But in nickel, which is elastic
better
product, it's not elastic, or it's not as elastic, I should say. What does nickel do?
It's less.
I don't know what it does. Aside from it provides
nickel
5
goes
cents.
Into a lot of industrial. It goes into a lot of industrial products. And then I
goes into 5 cents.
Pull a 6 gun as the man in the black hat at Harris, and I get angry at Westworld.
Oh, wow. What a great reference. I've actually never seen the show. I'm sorry. I don't have HBO.
You've never seen the show. You never have HBO. Folks, we have...
Oh, no. We have a Contango situation? Or
we have a Patreon.
We do.
Give money to Patreon. We can get Aaron an HBO.
Yes.
I promise we can. And on top of that...
patreon.com/drunkonomics, DRUNKEOMICS.
And then you can find us
at... I don't know if I did.
Drunkonomics. MySpreadshop.
I thought it was drunkonomics.myspreadshop.com. Was that what you were about to say?
Drunkonomics.myspreadshop.com.
That was what you were about to say.
Yeah, drunkonomics.myspreadshop.com.
I've been drinking too, dude. But
between the two of those, we can figure out how to make Aaron a proper Westworld, and or just to put you guys in a proper... Aaron, do we make hoodies?
Yes, we make a lot of hoodies. All we do is make
them in
hoodies.
Black.
We make them in black.
We make them in black.
We make them in black, and we make them in darker black. I don't know. All I really do is wear black.
No, Aaron, for game day, do we make them in red?
We do. Yes, we do.
We make them with beer pockets.
If it's a pocket, it's a beer pocket.
Absolutely, that's right. So you can do that. You can get a drunkonomics.myspreadshop.com, and you too can be drunkonomical you.
Yes.
And hopefully for everyone listens, let's see you in the voice chat. Join the Discord. We'll see you in the voice chat.
Yeah, find us on LinkedIn. We got some good long
LinkedIn, the metaverse, whatever it is. Find the Patreon. Yeah. Join us in the Discord. That was a fun chat.
Yeah, I really enjoyed that.
I'm not going to say we're going to do it.
I'll say this
here's
too.
What I'll say.
Every Monday we record at around... When do we? 8 o'clock Central Time.
8 Central Time, so 9 Eastern, 6
So
Pacific.
If we see some stragglers hanging around 7:30 Central Time in our Discord channel, in the general voice chat, we'll stop in before it's 2 shots before the mic is hot.
Yeah, if you guys are in there Monday between after 9 o'clock in the general voice chat, we'll try to pop in.
Yeah, exactly. And with that said, all I wanted to let you know is, if you're in there, I just hope that you play chestnut checkers, because I've been telling you that forever.
And I hope you all are hugely supportive of the new puppy in the family.
Please be supportive of that puppy.
It's not just Flynn anymore, folks.
It's not just Flynn. It's
Flynn and Cora.
Dude, I mean, what a gorgeous dog. And from there, Phil and Kill.
Both of them.
Don't brag, just say.
Chestnut checkers. The bishop's not going to skewer itself.
Yeah. That's how he died.
That's how he died. And, well, all I'll say is, ladies and gentlemen.
What?
Stay drunkonomical.
Cheers, my friend. Stay drunkonomical, y'all.
Cheers.